In the dynamic world of trading, risk management has always been an essential part. In this video, we will be looking at the secrets of effective stop loss placement with proper techniques and with real world applications. I'm Senthur Rajendran, and this is Mastering the Art of Stop Loss Trading. Let's dive in. Stop loss. What is it? As the name suggests, it's just a way that we limit our losses. We do not want our losses to just keep on growing so that we will be staying in the game for a longer period of time. So safeguarding your capital has to be one of the most important things you have to follow before you look to getting into profits. So in this, I've made a small presentation to break down my strategies and the ones which I use. I would like to start this presentation with a quote. Surviving is one of the characteristics of getting better. As long as you can survive, you always have another trade to prove your worthiness. Basically, it's just that the longer you are in the game, the better you will be, and the better you will be taking trades. So let's discuss what the points we'll be seeing today. We'll be looking what is stop loss, which you already saw, why to place it, how to place it, and where to place it. That is all that matters. So we have already looked at what is stop loss, then why to place a stop loss, just so that we can limit our losses. That also we have already discussed. And in the following slides, we'll see how and where to place stop loss. So let's check the priority list before placing your stop loss. First one we have to see is risk tolerance. How much risk you are willing to lose in that particular trade. So let's say you have a capital of 1.5 lakhs and you'll be able to trade with one lot of Bank Nifty futures. So for every 1 point move against your position, you lose 15 rupees. So for a capital of 1.5 lakhs, 1% is 1500 and you'll get a 100-point move as a buffer. So which is quite good. But what in case you hedge your positions and you will now be able to get around 5 lots of Bank Nifty future, and with the same 100-point move against your position, you lose close to 7500. Along with the hedge, let's just assume that your hedge is normal, but your futures will give you at least 7500 rupees loss for the same 100 points. So before taking any trades, you have to make sure how much money you want to lose for that particular trade. If you have fixed amount in your mind, let's say around 7000 or like 5000 or 10,000, depending on your capital and your risk taking ability, let's say you have fixed a price, then you can place a stop loss according to that price. Once that price reaches, if you have enough, let's say if you have given enough room for the market to move and you have like 100 points of space between your position and your stop loss, then it's quite good. And second thing is technical analysis. If you have a knowledge about technical analysis, then you can adjust your positions and target your entry just near a support or resistance, which has a high chance of giving a bigger move, and it will also limit your risk. Okay, we'll see about technical analysis a little bit later. And position sizing is what we already talked about. That I will also cover when we are looking at the charts. Fourth one is volatility assessment. So if you're trading in options and if the VIX is going high, then there is a chance that the option prices may skip. So let's say if the option is trading at 300, then next, within a bigger move, the options may skip like 10 to 15 points, and it may be trading like 315, 320 immediately. It will skip all the middle layers. So you cannot always rely on the options to hit your targets, or the options to hit your stop loss all the time. And sometimes it skips. So you have to keep that in mind as well. And I'll talk about a secret technique a little bit later when we see the charts. And the most important thing is discipline. If your stop loss hits, then there is no way about it. Just quit, just stop the trade and accept your loss. So we'll see more about technical analysis in the next coming sessions. Okay, so let's first see how you want to keep your stop loss. Okay, so first is you first recognize the trade. You want to go long or short. Then second thing you have to determine is where do you want to enter the trade. So the entry is all dependent on the technical analysis. And third is stop loss determination. That, of course, where you enter and where you want to exit the trade if it goes in the opposite direction. If you determine that, then you'll know how many points you're willing to lose. So once that point is determined, then you can go for position sizing. Okay, that is dependent on your capital. And then fifth is entry, and sixth is exit. Either you exit at your stop loss, or once your target is reached, you exit there. But the most important part is position sizing. So let's go into the secret technique. I'll be discussing the technical analysis, time frames, and trade durations in these techniques. Okay, then we'll see about disciplines. So let's just dive into the charts, and we'll talk about technical analysis. Okay, so now I have charts in my screen, as you can see. Okay, so now with these charts, let's start with the term of technical analysis. Okay, so what do I mean by calculating the stop loss in respect of technical analysis? Okay, so let's say the chart was moving from here, it was going up, then it had a dip, and now you can see that, okay, I have drawn a level, and the market is not able to cross that level perfectly. Okay, it's not able to sustain it. So this was evident in this candle itself. So when it came back again, then it's a good opportunity to short the same level. Okay, so if you are shorting the level at 48,327, okay, let's say if you're shorting this level, then where will you keep your stop loss? Your stop loss should always be above the previous swing high or swing low. Okay, so let's take a short position, and if you're shorting from here, then yes, your stop loss should be just above this level, because if it's touching this above level in any way, okay, even though if it doesn't close, if still it touched, then there is a good chance that it will shoot up. Even though if it touches and comes back again, there is a good chance it will shoot up in the next phase before reaching your downside target. So that is why it's always important to just set your stop loss just below or above your positions, the swing high or swing low just below, just above that. Okay, so this is one example, and let's see a second example. Okay, this is also a good one. So let's say you want to, okay, just say you want to long this. Okay, so you want to long this position. Your stop loss should be just below this, but when you will be entering the trade, you will be entering the trade when it comes here. Okay, so you see it just touched and it went out. So you have to be very careful that you just block your orders, or you just exit out of your position whenever it comes near here. Okay, you might have entered the trade here, it might have gone long, but eventually it fell and it came back again to your position. But as soon as it hits, just get out of the trade. Okay, so that is another example where your stop loss is hit. This is another trade where I went short actually, just because there was not enough supports here. So okay, let's say if you wanted to go short over here, okay, where would you have gone short? Okay, so let's say you went short at this level. Okay, then your stop loss will be where? Just above the previous swing high. Okay, so this is where you will be keeping your stop loss. Okay, and your targets will be just this one. Okay, so this is another example of how you keep your stop loss, just above or below the previous swing high or low. Okay, you see, this is how you set your stop loss. Okay, so now let's talk about position sizing. Okay, let's just take all the three examples. Let's assume you have 1 lakh of capital and you want to keep a stop loss of around let's say 10%, 10,000 rupees stop loss. Okay, so with 1 lakh capital, at the money, let's say it's around 300 rupees. So let's calculate how much the option prices will be. So option price is 300 and your lot is 15 per lot in Bank Nifty. So each lot is for 4,500. Okay, and with 1 lakh of capital divided by 4,500, you can get like around 22 lots. But let's just round it off to 20 lots. Okay, you're trading with 20 lots. So 20 into 15 is 300. Okay, so each and every point Bank Nifty moves here, your option at the money option will move 0.5 rupees. Okay, so here the stop loss was 40 rupees and your options would have moved 40 points, your options would have moved 20 points. Okay, so 20 points, if the option moves 20 points, then how much you will be losing? For 20 lots, you'll be losing around 6,000 rupees. So that's higher than your original stop loss. So now this is where you tweak it. Okay, 15 is not, and into 20, 300 is your, as you already determined that your stop loss is 40 points and you, the per lot is 15 quantity per lot. Okay, so if the Bank Nifty moves 40 points, then the options will normally move 20 points, and if the option loses 20 points per lot, then 15 into 20 is 300. So 300 rupees you will be losing if the option moves 40 points. Okay, so let's say the maximum you want to lose is 5,000. So 5,000 divided by 300 equals to 16.6. Let's take 16 lots. Okay, if you trade in 16 lots of Bank Nifty, then your loss will be limited to 5,000. Okay, and if in case you want to lose 10% or like around 10,000 rupees, then you can take 20 lots and your stop loss would not have hit. Your losses, your stop loss, even though if it hits, then your loss will not be 10,000. But if you want to just lose 5%, then you have to tweak it to 16 lots and not go with the entire quantity of 20 lots. Okay, and same here. Okay, so here the situation is a little bit different. The stop loss is 92 points, which is quite a big trade. Okay, so options will lose 50 points. So let's calculate again. 15 into 50. Okay, so it is 750 per lot. Comparatively, earlier it was just 300, now it's 750. It's more than 2.5 times. So let's calculate again. If you want to lose 5,000 divided by 750, you will be trading just with 6 lots. So this is how you have to change your position size according to your stop loss. And if in case at this same trade, if you take same quantity of 20 lots, okay, then what would have happened? So each trade is losing 750 and you're taking with 20 lots. That means you're losing 15,000 rupees, which is 3 times the original stop loss which you thought. So this will not sustain you for a longer time. Okay. So you have to first decide where you want to take your stop loss, and then according to that tweak your position sizing. And technical analysis is where this part comes in. Okay. And even here, you see, this is again a 95 point stop loss. So if you are very good at technical analysis, then you could have actually taken the trade just as it broke the 1 hour candle. 1 hour level, it broke and closed it, you could have taken here. So when it came back up, you could still have taken it when it came back down. Okay. So if you would have taken the position here, let's say here, then your stop loss will be 33 points. So this is where your mastery of technical analysis comes into play, as you can see now here. So this is, if you would have seen here, the stop loss is only 33 points compared to 98 points. Okay, so it just depends on how strong you are in your technical analysis. If you are strong enough, then you could take a very, very small stop loss. Or if you know that, okay, this is where the market would go short, then just take the trade as soon as the market is going to reach that target, so that even though if it touches it, then your losses will be small, and if it doesn't touch us, then your profits will be too high, and your risk to reward ratio will also be too high. So that is one of the best trades you will be taking if you are very good at technical analysis. Okay. So position sizing, we have discussed it, so let's go back. Okay, so now a very important part. Okay, so this is my secret technique, and what I do is I place my stop loss depending on the time frame in which I'm trading. Okay, let's say if I'm taking a day trade, if I'm looking at a daily chart, then I won't be putting my stop loss at a 1 hour level or a 4 hour level. Okay, so let's see if this is the 4 hour level. Okay, the market, did it support the 4 hour level? Yes. Okay, so let's just take this trade, this yellow line. Yeah, you can see the yellow line at 47,782. So okay, this is where I first would have gone long. Okay, so if this was the long trade right around here, okay, just at this part, okay, I would have gone long from this part till the next 4 hour, which is still here. Okay, so this would have been my trade, and my stop loss will be just below the 4 hour level, just below this one. Okay, and this would have been my target. Okay, so my stop loss is now around 400 points. So I would have tweaked my strategy or my position sizing according to this stop loss. What I would not have done is just go into 1 hour and then looked into it. Okay, so if I would have went into 1 hour, then my position would have been here, and I would have again, I would not have set this stop loss here because I'm trading at a 4 hour level. So I will be placing my stop loss based on this level, not this level. Okay, so the 1 hour trade, let me mark it. Okay, this is the 1 hour level, and when we come to 4 hours, what happens? It is the same candle. Okay, so this is where I'll be placing my stop loss and not here. So this is my secret technique which you can follow. So if you place like that, then what happens is when you come to intraday charts, okay, the same level for 5 minutes, okay, where would you have placed the trade? If you're taking a trade here to go long, okay, you saw that, okay, this level is respecting. Okay, if you're taking a trade here, you could place a stop loss here. Okay, let's go along from this level. You could have placed a stop loss just right below this and taken the trade. You could have booked like around here. Okay, why did I book it around here? Because there was so much of accumulation here. So just below this level also you could have booked. Okay, let's take this trade, and just below this level you can book it. Okay, so this is what it is, and the risk to reward is like risk is still 182 points. So 182 points, I will change my position sizing according to this level. So that is how, and I'll take my targets here. Okay, so that is how you can keep a particular price as your target, that is my maximum risk I'm willing to take, and change your position sizing according to your stop loss. Okay, so, and the trade duration is also important, because if you are trading for, let's say, the next day, then if you're taking a swing trade, then you'll have to consider your options might have some theta decay. So you can see that, okay, the chart is moving towards your position, but still your position is not giving you enough profits. That is because of theta decay. So you have to understand options better to understand why it's not giving you the enough profit. But still, this is how you can determine the stop loss. And if your trade was correctly positioned, or the trade size was correctly positioned, then you would still not lose money. You will still end up making some money, or at least break even. Okay, so the trade duration also matters when you are trading in options, because theta decay is always looming, and if you're option selling, then it's great, it will work in your favor. But if you're buying options, then you'll definitely need to look at the trade duration for the stop loss. Okay, and no matter what, the next thing we'll talk about is, okay, the last point we'll talk about is discipline. So why do you need to be disciplined to book your losses in your stop losses? Because if you're not disciplined enough, then you might end up losing more than you can afford to. Okay, let's say you have 1 lakh of capital and you're losing 5,000. You still have 95,000 remaining, with which you can easily earn back this 5,000 and make some more, and you can grow your account. But what if in case you're losing 20,000 instead of 5? Then once you're losing 20,000, then you'll just leave with 80. It's just hard to make 20,000 from 80,000 capital, rather than making 5,000 with 95,000 capital. Okay, that is just a simple math. And if the losses keep on progressing, then you'll end up blowing your account sooner than later. Okay, so first determine your stop loss, how much you are willing to lose, and then take your trades accordingly. So this is my secrets for stop loss, and I hope the video was informative. And if you like this video, definitely share, like, and subscribe to this channel. I'll keep on bringing some more additional contents like this one. And do comment what you want to see next. Okay, or you can join me live in my live trading sessions, and you can see my live trades as well. I have some additional videos. I'll link to it in the comments. So see you then. Have a good day.